Good morning, Hadyn. How are you doing today?
Morning, Gary. All good, that's for sure. Another sunny day in KZN, so absolutely no reason to complain, that's for sure.
Fantastic. Hadyn, just wanted to catch up with you. From our last chat we had on Wednesday last week, it was just before the budget speech was delivered by Tito and Mboweni. I just wanted to find out, how did things actually play out in the market after his speech?
Yeah, Wednesday was one of the bigger days on the calendar for the Rand during the year, with the budget speech coming out in the afternoon. And the reaction was the Rand got a bit of whiplash at the end of the day. It was quite an interesting afternoon. The initial reaction was incredible strength. We were expecting a better story from Tito based on what he was talking about in October in the mini budget speech. We know that there'd been an improvement in our various metrics over the past few months. But we weren't ready for him to announce a cut in taxes. Everyone was talking about a hike in taxes. And he said 40 billion rands worth of taxes that had been proposed in 2020 budget speech was now off the table. And more than that, corporate taxes, which have been at 28% for some time, was going to come down, or is going to come down to 27%. So that was a real surprise, a pleasant surprise for the market. Obviously, those initiatives aimed at supporting economic growth and job creation at the end of the day. And he also spoke about freezing the public wage bill for the next 3 years with the intention of saving just over 300 billion rands worth of salary increases over the 3-year period. So these were incredibly positive, and the Rand, or the market, enjoyed these items, and the Rand surged. I mean, just before Tito started speaking, we were sitting at 14.55, 14.56 to the dollar. It went all the way to 14.38 in double quick time. So you can see that that was the catalyst for that move. And my phone didn't stop ringing. Immediately, people were trying to buy dollars. It was chaos. But unfortunately, those gains didn't stick for very long, and quite quickly we went from 14.40 to 14.50, 14.60, 17.80, and ended up at around 14.90 by the end of the day. And that's because while those little surprise curveballs were nice to hear, the real metrics that the market wanted to focus on was what's happened to our debt situation. And unfortunately, the picture's pretty bleak. Just one of the items, and there's too much to go into in this little recap, but one of the items that really caught the attention was our debt servicing costs. So how much does it cost us to pay our interest repayments, not the capital, just our interest repayments on the money that we borrowed? And Tito, his projections are that by 2023, our debt servicing will amount to 338 billion rand for that financial year, which will put it then the third biggest line item on the government's expenditure list. So that's a concern, and that was one of the main reasons why the Rand slid after the initial surge past where we were, and then some.
Perfect.
So yeah, it's kind of, I suppose the analogy that we can use is, and I'll sort of say it in reverse. From October to February this year, we took 5 steps forward. We were right at the bottom of a deep trough in October, and made incredible strides to get to where we are, and that's a big positive. But from February last year to October, we took 10 steps back. So 10 steps back, 5 steps forward. Great achievement, but still 5 steps back overall, and that's left us hurting a little bit.
Absolutely. Now, I mean, after the budget speech, Tito had spoken about our debt situation, as you've just spoken about now. The Rand still then started to weaken further, as you said, to 15.19 to the dollar. Talk to us a little bit about the bond yields in developed markets. The US 10-year bond shot up to 1.6%, I think you said, in previous discussions. Just maybe give us a little bit of insight as to why, even after the speech and the bad debt, we still ended up taking a little bit of a hiding on the Rand.
Yeah, absolutely. So regardless of what happened locally last week, the Rand was always going to be under pressure. We didn't really know it was coming in the early parts of the week, but by the end of the week, risk assets, which includes emerging market currencies like the rands and equities, were all under severe pressure, especially over Thursday and Friday. US bond yields, as we spoke about briefly last week, had been at record lows for some time and had slowly started ticking up from sort of mid to late January and into February. But last week there was an aggressive spike, went from 1.38, 1.39%, which is very low compared to our bond yields, but high in the developed markets space, right up to 1.6%. And basically, it's that whole flight to risk or flight away from risk scenario that played out. So volatility in the bond market creates uncertainty in the market. When there's uncertainty, your big pension fund managers go to dollars. It's just a knee-jerk reaction. They always do it. And when they go to dollars, there's demand for dollars. And of course, the dollar goes north, while risk assets like the rand goes south. Layered on top of that, of course, is that all of a sudden, your fixed income investors get better yields for sitting in US bonds with a zero risk profile attached to it. So there's a rotation out of your riskier assets into a slightly more attractive or comparatively more attractive bond yield than they were this time a couple of weeks ago. And again, that move away from risk assets like the rand into bonds is negative for the rand. So yeah, it was going to be a tough week for us regardless, and we just had double whammy with our budget speech overlaid at the same time.
So if we look at increasing bond yields in the developed markets, and we're going to talk about obviously US, the UK, and Europe, has that been bad news for the rand all around, or only in certain aspects?
Interestingly, not. The US market, and that dominates, the majority of global activity, saw dollar strength off rising bond yields, because there's two parts to the story. There's the bond yields, which are going up, and they were going up around the world. And then there's also, how do the central banks in those areas respond? What's the rhetoric that they put out in response to a sudden spike in bond yields? In the US, your Federal Reserve governors like Jerome Powell, who's the chair of the Fed, and various other Fed members, they had a very cohesive message in that they're not bothered. They're not going to do anything. Let the bond yields go. They're happy to let inflation tick up. And that message to the market was that there's going to be no intervention to bring interest rates down by the central bank, the Federal Reserve, and therefore you can pile into bonds because you're not going to go in and interest rates get artificially brought back down. Dollar strength. In the EU, the reaction was exactly the opposite. Christine Lagarde, who is the president of the ECB, the European Central Bank, plus a couple of her members came out and said, this is bad news. Higher interest rates, higher bond yields are bad for consumers who are already under pressure, are bad for businesses. We're going to do everything in our power to bring EU bonds down. And when they do that, as an investor, you know that you're going to get less return if you go into European bonds, and the euro got sold off as a result. So it was quite interesting. At the same time that we were losing ground against the dollar, we were actually gaining ground against the euro. So different stories and different results.
Fantastic. That's awesome, Hadyn. And then I think maybe just in parting, is there anything on the immediate horizon that you guys feel is important that we should be paying attention to with regards to the rand?
Sure. So fortunately on the local market, there's not a lot going on. We get to cast our eye further afield and see what's happening internationally. Of course, there will at some point be a response from the three ratings agencies, the credit rating guys, Fitch, and Moody's, and S&P. We're not sure what they're going to say or when they're going to say it. But for the time being, that's off the radar. On the immediate front, we've got two main events internationally, and both of them coming from the States. On Thursday, i.e. tomorrow, Jerome Powell, the head of the Federal Reserve, is speaking at an event held by the Wall Street Journal. Given what's happened in the bond market over the past couple of days, he's definitely going to address that. And the market will always hang on what he's got to say around the Fed's policy. Are they thinking about hiking interest rates sooner than they're communicating? Personally, I think he's not going to say anything that's going to surprise the market. It's been a very cohesive message across the board from the Fed. So regardless, it might move the market slightly. But the big event this week is definitely on Friday afternoon, 2 to 3 o'clock our time. That's when we get the monthly US jobs data. US employment data of late has been surprisingly poor. So they've had good economic data, good growth stats, but poor labor stats, unemployment remaining elevated. And from the Rand's perspective, we're hoping that that remains the case, because if US labor is under pressure, that means that the Fed is not going to talk about hiking rates anytime soon, keeps the dollar under pressure, helps the Rand. So good jobs number for them will be bad for us, but a bad jobs number for them will be good for us.
Hadyn, that's wonderful. Thank you so much for your time this morning. And I hope you have a fantastic rest of the week, and we'll catch up again next week, Wednesday.
Awesome. Thanks, Gary. Have a good one. Chat soon.
Fantastic. Thank you, Hadyn.
Cheers.